In this video, we're going to go over an individual tax return. That way, when you get yours, you'll know where to look on which forms and what lines so you can hopefully answer your own common questions. So let's begin. First, one of the very first pages and one of the most important is the filing instructions. The filing instructions let you know what your tax liability is or what your tax refund is, where to make certain payments, where to make estimated payments. So it's very important that when you get your tax return, you review these filing instructions. Again, they'll tell you how much needs to be paid, where the payment should go to, where estimated payments should go to, and so forth. So this is very important. The next form we're going to go over is the Form 8879. When we finish your tax return, we always send you the Form 8879 because this is the form that allows us to electronically file your tax return to the IRS. So we normally send you the 8879 and we'll just have you sign it and date it, and that gives us the authorization to electronically file the tax return on your behalf. Next is your estimated tax payment vouchers. And I get the question all the time, why do I need to make an estimated payment, or do I need to make an estimated payment? And I'll try to explain it as simple as possible. When you have income such as your pension or retirement, Social Security, investments like interest and dividends, anytime you have income like that and you don't have any federal tax withholding on those income, you need to make estimated payments, because if your federal withholding is not going to cover your tax liability, you need to make estimated payments. And the way it works is you either need to pay 100% of your prior year tax or 90% of your current year tax. So anytime we give you estimated payments with your return, the payment amounts will normally cover 100% of your prior year tax. So that's what we're basing these payments on. We don't know what your future income looks like. So anytime we give you an estimated payment, it is to cover 100% of your prior year tax. And your payments, as you can see, the first payment is due April 15th. The second payment is due June 15th. The third payment is due September 15th. And the fourth payment is due January 15th of the following year. So this is, a simple 1040. We got Jane and Joe Doe, married filing jointly, and they have, some dividends, some IRA distributions, and Social Security income. So this is all, their various income. And you'll see the adjusted income and your taxable income. Then we go to the next page and you'll see what your total tax amount is. So normally, if they had made estimated payments or they had any withholding, you would see those amounts on line 17 and 18. But in this situation, or this scenario, they didn't make any payments. So, here's their total tax. And because they didn't make any estimated payments, they have an estimated tax payment penalty of $213, which brings their total tax liability to $7,162. So again, to reemphasize, if you don't have any withholding on your various income, you will need to make estimated payments. So just to recap, these are the first two pages, which are the most important pages. This shows your income. This shows what your tax is, and if you made any payments. And then again, if you go back to the filing instructions, This basically summarizes what's going on your return. If you have a tax liability or a refund, and if you have a tax liability, where to make the payment, how to make the payment, and also where to make your estimated payments. I hope this video was helpful, and we'll talk to you later. Bye bye.